All right, so what's in my stock market portfolio this week? As you can see from the thumbnail, I'm down about $2,000 from last week, but obviously it's unrealized losses. I haven't sold anything that would confirm the losses, but definitely disappointing to see that I'm down $2,000 from last week. I didn't contribute much this week, only the $500 at Wealth Simple Trade. So actually, if you include that $500, I'm actually down 2,500 this week from last week. And definitely disappointed I missed out on confirming a $1,500 profit on Monday, which would have put me in a better position this week. Regardless, let's get into my portfolio holdings. So in my margin account, just look at stocks. And in order of most profitable position, I've got Bombardier that I bought at $2, closing at 225, so I'm up 12.5%. But because I've got covered calls that I sold against them, I can't do anything until December 21st. But I already collected 4.5% from selling the covered calls. And depending on the price of Bombardier on December 21st, I could collect more. I could probably sell more covered calls and collect maybe 5% again or even more, depending on the strike price I choose and depending, of course, on the price of the stock come December 21st. Or I can even just sell the stock depending on the price. So let's say right now it's at 225. So let's say come December 21st, Bombardier is trading at 225. Let's look what the option would be. So of course I can't know what the option price would be, but I can. So come December 21st, this won't exist anymore. So the following expiry date for that option would be January 18. And at that strike price of $2, you can see that the last trade was 43 cents. At 225, it was 28 cents. So let's say December 21st, I look at the 225 strike price. It's not going to be worth 28 cents. Let's say it's going to be worth, I don't know, 12 cents. So I've got 500 shares. So 500 shares times 12 cents. $60 minus $15 of fees is 45 on a $1,000 investment. So that would be another 4.5% return for the following month. This is just a prediction. It'll all depend what the price of the stock is come December 21st. But this is how I could generate continuous return by just holding the stock and selling covered calls and then eventually selling the stock, let's say at $3 or $4, because this is a stock that has potential to reach $4, but it's going to take time. So if you want to hold the stock long term but collect something from it while you're waiting, you could sell covered calls against them. Then I've got MasterCard that I bought at 181.98, closed at 196.5, so I'm up 8%. This was trading at $210 on Monday, so it was up close to 15%. Amazon that I bought at 15.15 closed at 16.29. This was trading at 17.70 on Monday, so I was up 17% on Monday. Right now I'm only up 7.5%. So I basically lost 10% with Amazon, which is about $300 because I was up $500 profit here. Got Groupon that I bought at 2.9, closing at 3.1, so I'm up 7%. I also got cover calls on Groupon, so can't really sell it right now. But come expiry date, I'll be able to either sell more covered calls. Most likely, I'm gonna sell more covered calls because I wouldn't want to sell Groupon at just 3.1, not a big capital gain. So I would probably continue holding it and just sell covered calls. I've got TransCanada Corp that I bought at 51, closing at 53.5. This was trading at 55 or 56 on Monday. Regardless, I'm up 5% right now on this position. I've got Exxon Mobil that I bought at 75, closing at 77. This was trading at 81.5 on Monday. So yeah, definitely disappointing, but I'm up right now 3.5%. I've got Qualcomm that I bought at 54.50, closing at 56. I'm up 2.5%. This was trading at around close to 60, 59 something on Monday. I got JP Morgan Chase that I bought at 103, closing at 103.29. I believe this Friday morning it was trading at 106, but then at the end of the day it just dropped down to 103.29. So I'm at par, let's say, on this stock. I got BMO that I bought at 93 on Thursday, closing at 92.71 on Friday. Got Snapchat that I bought at 5.84, closing at 5.8. Got Blackstone that I bought at 32, closing at 31.42. Very disappointing because it came very close to my selling order on Monday. Very close, like 15 cents close. And it didn't sell. I could have made my 10%. And instead it dropped back down even lower than the price that I bought it at. So it is disappointing, but it is a stock that pays dividends, so I don't mind holding it as long as I have to, since I'd be collecting dividends on that. I've got United States Steel that I bought at 21.81, closing at 21.31, but I sold covered calls on that, collecting a decent return, I believe around 5.5%. Yeah, so I collected $125 by selling covered calls on a 2181 investment, which is about, yeah, so above 5% return in 1 month just by selling covered calls against my United States Steel position. Bought some Kraft Heinz at $50, 20 shares at $50, closing at 48.71, so I'm down 2.5%. Got Barclays that I bought at $8, closing at 7.73, so I'm down 3%. But Barclays I also sold covered calls against. So I collected about $68 from Barclays, $68 on a $1,600 investment. So I collected 4% in 1 month from selling covered calls on my Barclays position. I've got Vermilion Energy that I bought at 32.5, closing at 31.23. I'm down almost 4%, but this is a stock that pays good dividends. Got Dollarama that I bought at 35. It was actually trading before earnings. It was trading close to $38. But right after earnings, it dropped to 31, climbed back to 33. Now it closed at 32.8, so I'm down 6% on this Dollarama position. Got Nvidia that I bought at 163.5, closing at 147.61. I'm down close to 10%. I had a chance to sell it on Monday at 170, so that at least I can buy it back at a much lower price, but I didn't. So instead, I'm down 10%. Got Apple, of course, that is getting destroyed. I bought it at an average price of 188, closing at 168.49. I'm down close to 11%, but I'm prepared to buy more Apple shares at around 160 because the last time I bought it was 178. So I want to keep a 10% gap between every purchase. So that would be so the next time I'd buy Apple would be at $160. And I've got GE that I bought it a while back at 7.85, closing at 7. I'm down 10%, but I also sold covered calls against GE. So as you can see here, collected around $27 minus $11. So I collected $16 on a $785 investment in 1 month. So that's about 2%. So 2% in 1 month. So times 12 is about 24% in a year. So in my TFSI, I still got AT&T at about a 32. This has been a while now, and closing at 30. So I'm down close to 6%. I've got Facebook that I bought a very long time ago at 168, closing at 137. I'm down 18%, and I've got Ford that I bought at 10.95, closing at 8.82, so I'm down 20%. So Ford, since I have more than 100 shares, I could probably sell covered calls against it, but because the strike price I would have to choose would be around like $9, but it would be too far from my initial purchase price. So if there's a risk that the shares get called away. So if that happens, then my shares will be sold automatically at the strike price that I traded at, which would be $9. So my shares would sell automatically at $9 while I bought it at 10.95. So it's a little risky. If my shares don't get called away, then it's perfect. I could keep selling covered calls at the strike price that's close to the market price, because the option premiums are higher when you're closer to when you choose a strike price that's closer to the market price of the stock. So in my RSP, got Dividend 15 Split Corp, DFN.TO that I bought at 7.99, closing at 8.16, and I'm up 2%. I actually had a chance to sell this like a week after I bought it at a 16% gain, but I didn't because I wanted to sell it higher, and instead I'm only up 2%. But this stock pays right now 15% dividends per year, so it's not a bad stock to hold. I've got Bank of Nova Scotia that I bought at 71.8, closing at 71.6, pays about 4% dividends. I'm at par. Facebook I bought at an average price of 140, closing at 137, so I'm down 2% only. Got AltaGas that I bought at 14.5, closing at 14.12, but it was actually trading at 13.6 this week, so it was a good opportunity to buy more. I think right now it's paying about 13% dividends per year, so very good. I'm down 2.5% on that, but I also sold covered calls against it. So I collected $24 on this. So $24 on a 14-15 investment is 1.6%. So a 1.6% return per month times 12 is 19% or close to 20% return. So this is already a stock that pays 13% dividends. Plus, if I can get an extra 20% per year, that would be amazing. Bought General Mills this week at 41, closing at 38.48. Like everything else dropped, down 6%, but it pays around 4% dividends, and it's got good capital gain potential. But Alibaba at 164, closing at 153. I'm down 6.5%. Honda Motor that I bought at 29.3, closing at 26.89. I'm down 8%. This is a stock I'd be willing to buy more of if it drops close to 26 and 25. Probably in the 25, I'd buy more, Got Vodafone that I bought at 22.87, closing at 20.48. I'm down 10%. If it drops to 18, I'll probably buy more shares just to get 100 shares, and then I can sell covered calls on it. Ford that I bought at $10, closing at 8.82. I'm down 12%, and since I have more than 100 shares, I should probably be selling covered calls. But once again, my purchase price is far from the market price, so if I choose a $9 strike price, there's always the risk that my shares get called away and then I'm forced to sell at $9 while I bought it at $10. But I'm collecting decent dividends from Ford while I'm waiting, so I'm not too worried. I've got DF.TO, Dividend 15 Split Corp 2, that I bought at 4.5, closing at 3.69. I'm down 19%, so yeah, that's pretty bad, and it doesn't pay dividends yet. But eventually it will, and when it does, it's going to be at a crazy yield, like over 20%. So these are the dividends I received. So the dividends I received last week, December 3rd, as you can see here, doesn't show on this window, but it's about $17 and $13. So about $30 that I received from Ford this week. So $30 on the investments I have with Ford. So yeah, I've got this call option that I sold on United States Steel, collected $114. Barclays collected $68. AltaGas collected $24, and Snapchat a while back collected $366. Bombardier collected $45. Groupon collected $23. GE collected $16. So I see selling covered calls as another way to make money from holding stocks like dividends, but it has the risk of if you don't choose the right strike price, your shares can get called away and you're forced and you lose your shares at the strike price that you chose. So on the investor's edge side, I've got more AltaGas that I bought at 14.75, closing at 14.12, so I'm down 5%. I've got Bank of Nova Scotia, I'm down 6% on. I bought it at 76. Got Barclays that I bought at $9, I'm down 12%. Got Dollarama that I bought at $40, I'm down 20%. And I've got Enbridge that I bought at 48. I'm down 12%. And I've got some Synovus Energy that I bought at $15. I'm actually down more than this, but I bought several times, so it's giving me a different average price. So this here is incorrect, but I'm down. I bought it at 15 and right now it closed at $10. So I'm down close to 33%. Got more DF.TO that I bought at 5.16, I believe. I'm down 30%. Got Ambridge that I bought at 46. I'm down 8% or 9%. So I've got General Electric here that I bought on Friday at $7, but because the funds were in my Canadian TFSA, so the position stays in the Canadian TFSA. So I have to call Investors Edge or chat with them so they can transfer this position to my US TFSA. So that the reason I bought it was just to complete 100 shares so that I can sell covered calls on GE. So obviously this is in the wrong place. This should be transferred to my US side. And I've got Hudson's Bay that I bought at 13.5, closing at 9.37. I'm down 31%. Beautiful stuff. So you see on the US side, I've got 58 shares of GE. I've got 42 that are on the Canadian side. So I just need to bring them to the US. I'll have 100 shares of GE, which I'm down right now on my US side. I'm down 59%, close to 60%. I've never been so down on a stock before. Kraft Heinz that I bought at 75. I'm down 34%. New York Mortgage Trust. This is a stock I'm keeping forever just because of the 13% dividends. I could probably sell if it reaches 7 or 750. Got Orange that I bought at 15.75, closing at 16.6. I'm up 5%. So yeah, finally something positive in my Investor's Edge account. So I got some dividends from Enbridge this week, December 3rd, $63, and $21 were call options that I sold on Synovus Energy. So more Enbridge dividends, $41 here. So yeah, that's what's in my stock market portfolio this week. I'm not sure what I'm going to buy next week or what I'm going to sell. I'm probably looking to sell first because this market is very volatile and I want to make sure I have enough liquidity to buy stocks in case this market crashes. So yeah, like always, if you have any questions, leave them in the comments below. And if you do enjoy my videos, it would help me a lot if you share my videos. And if you're gonna open an account with Questrade, use my referral code in the description below the video so we can both get between $25 and $250 back depending on your deposit. Thanks for watching.